Hi. So I am here with Georgia Kelley from Barr Mortgage Group. I am Christy Bushaw with Remax Paradise. I come to you today to talk to you guys about achieving that goal of buying a second home or a vacation rental property. First, I wanted to thank Georgia for these really cute cups she bought me with my great logo on it. So thank you so much. They're so cute, and they're perfect for coffee with Christy.
Yeah, exactly.
So Georgia, when, I'm from here, right. So I kind of have a challenge from the Gulf Coast, so I kind of have a challenge, but a lot of other people dream about living along our Gulf Coast and buying that second home, that rental property to enjoy. So I look to you to help us understand the best way to go about making sure financially our dreamers can become our homeowners.
Yeah. So a lot of times people come down on vacation. We have a lot of snowbirds too, so they'll call Christy, ask her about properties, and they'll call me asking about how to get financed. I think that it's really important, and Christy will tell people, especially right now at the market, I think you talked about on your market watches, how crazy the market is and how little that they're staying on the market. So it's important to get pre-qualified so you'll know what you can afford. There's been a little bit of changes in the guidelines, so they're coming down on the debt-to-income ratio for second homes and investment properties.
So what does that mean, coming down on second?
So sometimes you can get, well, before the changes, you could get pre-qualified maybe with like a 48% debt-to-income on a second home if you've got a great credit score, but now they're lowering that down to around 45%. Everything that we do, we have to run through an automated underwriting system, either LP or DU for Freddie Mac or Fannie Mae, and then that'll spit out an approved eligible, and that's what you're looking for whenever you're getting the pre-qualification.
So now you can have more debt.
Less debt now.
Less debt.
Yeah, they're getting stricter.
And more income.
Yeah.
Or same income, just less debt.
Yeah. So credit needs to be good, first and foremost. You always want to have good credit because it gives you a better interest rate, but it also helps you qualify with maybe a little bit less down. On your second homes, you need to have at least 10%. Now, some of the condos down here, you have to have 25%, just because of the way that the condo gets underwritten. It can't stand for a full review. It needs to go limited review, so that means 25% down.
So let's go back to the good credit.
Yeah.
So, because that's the most important part.
It is.
So there are some great apps out there to watch your credit and to monitor your credit and to get it to the best credit score possible. Credit Karma's one, and there are others as well. They're kind of like, though, they give you a general idea and they give you guidelines, things you can do to better your credit. So that's one thing that you can monitor your credit on, is that Credit Karma. But the next thing you discussed was having we discussed having debt to income, and then the next thing was that watching your credit. So just making sure you pay all your bills on time.
Always.
And then the next thing was down payment amount, and you had said some condos allow you to have less down payment than more down payment. I think I know I know the answer to this, but why don't you help explain to the people what determines if you need a full review or not a full review for each condominium, because it's very different.
Yeah. So, guidelines are always changing. They always come up with new rules for us to abide by. Condos, they get underwritten as well as the borrower. And down in this market, we have a ton of condos. A full review allows the underwriter to request documents on the condo, their bylaws, budget's a big one. So what we'll do is we review the budget to see how the budget looks. It may not mean that there may not be hiccups along the way, but budget's pretty telltale on whether we can do limited or full review. 25% always gets you a better rate with the condo because there's a loan level adjustment for not putting 25% down. So you'll see a little bit of a higher rate if you don't have the 25%. Right. But, we always encourage people to be able to put 25% down. But if you can't, then there are condos down here on the Gulf Coast that are available with 20 or 10% down.
So the big picture when you add vacation rental or your second home into your portfolio is to make sure a lot of people want it to cash flow and they want to understand the end expense. If you put less than 25% down, then you have mortgage insurance, which is another bill, and it costs you more money and makes it more of a challenge to cash flow. So in your budget, when you first buy your home, if your dream is a second home, add a line item that says savings for a second home. It doesn't matter how much you start with, it just will really help you to achieve that goal.
Yeah. And one thing I wanted to say is the mortgage insurance will be anything less than 20%. But yeah, it's always good to have a budget. It's always good to talk to somebody. I don't necessarily have to take an application in order to answer any questions that you have. I can get a good idea of, income, debt. And some people think that you may make $100,000 a year, but whenever it comes to guidelines and how it's underwritten, you may not make that much. So it's always good to talk to a mortgage professional. You can call me to ask questions about your income, your debt to income ratio, which is super important, or just have questions about second home properties, or what's the difference between an investment property and a second home. Some people can't qualify just based on their regular income, so they'll need to move it over to an investment property. You can actually get a rent schedule with the appraisal, and we can use 75% of that potential rental income to help offset some of the debts that the new vacation home or investment property will bring to you.
So it's always been my understanding that you just have to have complete control and not have to put it in a mandatory pool. There are only 2 condotels along our Gulf Coast that require you to put it into a mandatory rental pool. And you can't paint, you can't do anything. And those are Phoenix All Suites. Don't misunderstand me. There are a ton of Phoenixes down here, and they're all really good rentals. However, the Phoenix All Suites are just like hotels. So you can't finance on those just because they do require you to put it in the rental program so that you don't have control.
Right. So I can't do any financing. You can call a local bank and they can do a portfolio loan. It is not a conventional loan, so it's not going to have the 15 or the 30-year fixed rates. But those are still, I guess you can finance them. You just can't finance them on a conventional loan.
It's better to save your money and use it as a savings account and only buy those if you have cash.
or if you're lucky enough to have enough cash,
That's right. Next thing to discuss is after you've got a really good credit and then you've decided how much you're going to put down, what's the next step?
Get pre-qualified, get pre-approved. That way that whenever you're ready to put in an offer, you have that pre-qualification letter. Christy can tell you, I have so many realtors that tell their clients that it's super important for you to have it, and it is, because a lot of things I'm getting back now is that they're requiring that with the offer, right? That
is correct. Another thing we're seeing with this very strong market is the hour it hits. In a condominium like Seawinds, for example, there are multiple offers. So you need to make sure you have a trusted realtor that understands how to get that best for you. I just recently successfully negotiated off of 5 offers. My client won because they used my knowledge to explain to them, we need to do this, this, and this to get you this property. And they listened to me, and so now they're going to be new owners at Seawinds. So.
So the pre-qualification letter is important, and go ahead and get some of your documents ready because we'll ask for it. If you're self-employed, you need 2 years returns sometimes, but just go ahead and have those together. Profit and loss statements, you're going to be required to do those too for self-employment. If you're not self-employed, we're going to need paychecks and W-2s for the past year or 2 years, depending on which way that we send you. We're going to need mortgage statements. We're going to need your taxes and your homeowner's insurance. So most of this stuff is with the internet. It's easily accessible, so it shouldn't take you a long time to get those things, but go ahead and start doing your homework.
So long story short, say you just bought your primary residence and you're trying to achieve the goal of a second home or a vacation home to add to your portfolio. You just need to make sure to keep a good paper trail. Doesn't matter how much money you make, because in the end, it's all about what it looks like on paper.
Yeah.
Which is kind of a challenge to explain to a lot of people, like you said, that have made lots of money and have lots of savings in their account. But on paper, it doesn't look the same. So
yeah, sometimes your CPA wants to save you a few dollars, so it doesn't look like you make as much income as we're able to use. So it's always good to talk to somebody, a mortgage broker or lender, and ask the questions, get them to go ahead and pre-qualify you, so you can get ready to put it in offer and buy something that you want for you and your family.
That's right. And your family does enjoy it. So it's kind of like a savings account that you can enjoy. In our current market, as things are escalating, you get a lot of equity rapidly, but then you also get that rental income. Okay, so now they've gotten pre-approved, and now your realtor, usually most people are searching for real estate online, and they have found these dream homes, these dream properties. And the first thing they traditionally do is call me, and then I refer lenders like Georgia and lenders that will take good care of you. And Georgia has been a great business partner of mine in helping my clients to achieve their goal. So now you've got your pre-approval letter. What happens next? Well, we go look for property. And we usually find the one you fall in love with. We look at the numbers. I call Georgia usually out while I'm showing property. Is this limited review or full review? Can you double check and make sure that this price point's going to be okay for these buyers? So, and Georgia's fabulous about answering the phone all the time. And she goes over and beyond with answering the phone, and I really appreciate that because it allows me to provide top-notch service to my clients.
And you too.
So when we do find the property, I call Georgia. She checks the list. If they haven't done one in the last 30 days or so, in other words, if she hasn't purchased one, if she hasn't closed on a deal within a certain neighborhood or within a certain association within the last 30 days, she'll get the updated budget balance sheet minutes. It's also in our contract so that the buyer can review it. But the buyer and the lender review those documents. And then we just work through the contingencies to close and to own the property, keeping in mind, mindful of the numbers. The numbers are the most important thing when you buy vacation rental, second homes. And you want to get it for the least cost, from a lender perspective, from a purchasing perspective, but the maximum rental income. So there's a big picture. And hopefully within the next couple of weeks, I'll be doing an interview with some rental people so that you can kind of learn a little bit about how the rental plays into this. Georgia mentioned that you can actually use rental to go towards your income. Georgia, thank you for joining me at Coffee with Christy. You are very informative, and I so appreciate it.
Well, thank you. Cheers.
Cheers.